Good morning, everybody. It's Tuesday, December 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had, let's see, I got May corn here up 2 3/4 at 462 3/4. March soybeans up 4 at 995 3/4, and March Chicago wheat up 3 1/4 at 551 1/2. No export sales here this morning were announced. Good morning, everybody. Hope everybody had a nice night there. And again, not much in the way of fresh news here this morning. Ben, I know we were looking before the show at just some technical activity that's been taking place in the markets. Maybe give us a few thoughts here this morning, and then we'll throw it around the room.
Sure. Yesterday, corn made a new high for the move. It had an outside day, which means it went lower than the previous day's low, and it settled lower. So, you're looking at that going key reversal. Not uncommon on those to try to back and fill that bar to see. I think it gives a good point of context if we were able to take out and hold yesterday's highs. With us touching the 200-day moving average and being above it, I think we could see some longer-term players step into the market. The next point here, I think, is the weeklies. If we were to close above 454 today, this would be the 5th week in a row that corn closed higher. And if we're not, we would, if we close below that, we would have a new high with a lower close, which would kind of infer maybe a short-term rejection of higher prices. So you're also looking at some longer-term stuff, and it's kind of hard to really sink your teeth into that because we have we're looking at markets every single day in that time frame. But the weeklies, the weekly 50-week moving average in corn, we're slightly above that now, and that's 454, which is also last week's closing price. So I think we're at kind of in a place here where the bulls are going to have to dig in and keep it going. And if for some reason we start to bleed, we could see a little bit of a heavier exit. So I think it's a pretty big area. If you also go back to where we broke down from back in the summer months, those lows come in right around 459 to 461. So pretty big area here. Last day of the year, we'll see if there's any motivation from a big long in beans or a big short in soybeans. Really not that big of a short in soybeans. No. I think it's 1,000 contracts.
54,000, yeah.
54,000. Do they want to get a little bit funky with it, or do they want to take some profits? It's been a pretty consistent trade of wanting to sell beans and buy corn. Wheat also has been pretty strong. They have really built, a pretty good short over there, getting close to 100,000 contracts.
103, yeah. Largest since November.
It looks to me like wheat most likely has a higher weekly close. So we'll see. A lot of balls in the air, a lot of vested interest in how markets close the last day of the year. And we quickly go into first couple days of the month. Thursday, Friday was still kind of in a little bit of a holiday mode. And then certainly all eyes on the report beyond that.
Yeah, it's interesting. The funds, they bought roughly around 8,000 contracts of corn last week. Some private estimates have them. They bought a little bit yesterday too there, but 166,000. You look back, and that's it's pretty long for this time of year historically for funds, Ben. So you talk about protecting their position there.
Yeah. Well, and you look, the one thing I would say too, I think is worth a comment. It's been very much a slow grinding market. Is the record crop is here to be sold into some very strong demand. So even on this big rally, we've seen very little appreciation in volatility. Something that I looked pretty close, but March puts, which are going to cover a tremendous amount of important data drops, including the final report, the transition of power to President-elect Trump, We're back to where you could put a floor in, and not for everyone, right? Disclaimer. But March 450 puts our trading 9.5 cents. Looking back, you're going to have roughly 2 months of time and some pretty significant, pretty significant period in our markets if you're doing something and you're just kind of hanging out there.
Yeah, no, absolutely. Brian, real quick, I didn't see much change really in the forecast in Argentina or Brazil. I think we're still tracking kind of the same outlook by all estimations. It looks like it's going to be dry a couple weeks, and we'll just have to see if it all materializes and what the longer term, if it becomes a new trend or if we end up getting some water.
Yeah, it'll be interesting for sure, Dan. Latest models, La Nina shaping up to looks pretty strong here, so that could affect Argentina immensely here. So something definitely to keep an eye on. It looks like you said, dry for the next week here. We'll see if anything changes, but yeah, it's kind of shaping up like that. It's kind of sad on the bean side yesterday. Wasn't able to hold above that 50-day moving average. I think outside markets, the real was lower overnight. Dollar is stronger overnight. Seems like par for the course for the last month and a half. So first notice day is today, so be interesting to see if we get a little pop here going into the new year.
Yeah, absolutely. Real quick here, Rye, before we come into the open, livestock side, choice cutout up $3, but boy, hogs are starting to struggle.
Yeah. Yeah, we actually saw a little bit of a downturn in the hogs. I mean, you made multi-month lows. February slipped to the lowest we've seen since October 21st. So I think you just got the market probably squaring up a little bit. We're seeing some obvious signs of liquidation. Looks like commitment of traders showed that the funds started to kind of work their way out a little bit, but are still carrying this massively long position. But as of last night, open interest was down 5,700 contracts. So I think we're starting to see it a little bit. Next few weeks can be a rough time just in general for the meat markets, just going into that first 2 weeks of the year. So we'll see how that kind of shapes up. But generally speaking, we are seeing certain things like carcass start to weaken up. Cash has slowly been kind of trending lower. We saw hams take a $7 loss yesterday. So I think that's just going to keep maybe this break into perspective a little bit, just because it seems like there could be a lot of air in the market, and you got a big long commitment here that I don't think is really ready to just completely be out of it yet. So we'll see if the data really starts to support this move. On the cattle side of things, yeah, it's pretty choppy, kind of mixed close yesterday. It didn't seem like there really was that much action at all. We've seen these lower slaughters really kind of support the beef market here, with choice being up $3, select up 363. So there really hasn't been any bad news to say on that regard. It just feels like we've got another holiday in the middle of the week. Packers are going to be looking to probably keep cash as steady as they can, maybe try to pick something up if the board breaks. They try to pick something up a little bit cheaper, but otherwise it just feels like that's really what's kind of supporting us right now. So interestingly enough, managed money, at least in the last CFTC data, showed managed money almost record long feeders. Like they're coming up on their record. It was 21,000. Almost 22,000 contracts, and they're right at 20,000. Like that's a big position in the feeders if things go wrong. I think the impression is that this new administration is going to really hamper a lot of the trade with Mexican feeder imports. So overall, just we've seen a lot of that, and a lot of that I think is already kind of baked in the market. So there is a little bit of a wait and see, but like I said, the next 2 weeks are usually just kind of a vulnerable price time. So I think that's something to look out for.
Very good. Appreciate that, Rye. As we close for the last War Room of 2024, I want to make mention that we've hit the threshold of 500 subscribers. We certainly appreciate everybody that watches the show every day and does hit the like and subscribe. It's a nice milestone for us. We continue to build, and we hope everybody enjoys the show every morning as much as we enjoy doing it. So. Again, thanks to everybody that tunes in on a daily basis. A couple things to point out. I know we mentioned it earlier. We will have a full market today, so normal close here this afternoon. We will be closed tomorrow, so no War Room tomorrow. And then we'll have a hard reopen on Thursday, 8:30 Central Time. And then export sales will be bumped today, so we'll take a look at export sales on Friday for this week here. So as we sign off, throw us a like or subscribe. Again, appreciate everybody that supports the show, tunes in every day. Hope everybody has a very safe and happy new year. And we look forward to talking to everybody, there in 25 for another, what is shaping up to be another exciting year in the grain market. So with that, we're streaming live every day at 8:15 on X, Facebook Live, and YouTube Live. Once again, Happy New Year, everybody. Guys, Happy New Year to you guys. Thanks
Happy
for
New
all
Year.
you do. And we'll talk to you again on Thursday.
Happy New Year.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.